I think
Oh, there we go. So, Robbie, are you
there we
traveling right
go.
now?
Apparently, because my Wi-Fi is bad. Although my Wi-Fi is bad at my house too, so bad everywhere. Am I coming through okay before I keep talking?
You're shaky, but I can hear you. So,
Oh, no.
are
No.
you
We're gonna move the
called
hotspot
in?
up on top of no.
If you call in on your phone, it might be a little bit, then we at least hear you. So I'm very excited about today's call. I'm publishing a industry halftime report with Dave Savage tomorrow that where I'm taking a bunch of interviews he's done with top leaders about the future of the industry, where we're at today. And anyway, just it feels very appropriate to be talking to you, Mike, where it seems like, when I don't know, we're always talking about how we're at this very pivotal time in the industry, but it really feels like a big moment right now. So, for those who are in the audience, we'll do an introduction here whenever Robbie comes
Well,
back
I'm
on.
wondering
Oh,
if you can hear me, but I turned off my video for bandwidth. So if
yeah,
you
can
can hear
definitely
me
hear
fine,
you.
all right. We might just have no face today. I know for all the fans, the middle-aged female fans of me out there that this is gonna devastating, but I'd rather have my audio than my video. Uh Kristen, I was thinking this morning before the show, we say every time that we're so excited for our guests. I just feel like we it like goes without saying. Like,
I know I
this
can't help myself. I
going
actually
through them.
find
I can't
that
either.
annoying when I hear myself say it, but I can't, I
I
am
am
excited.
excited. I'm excited too, man. So today we have Mike Yu of Vesta, CEO and founder, uh, fellow millennial. At least I think so, based on your cool hair and glasses and necklace and shirt. Yeah, Mike.
I think I make the cutoff by like literally 1 year.
Yeah. Well, you're
Okay.
hipper than me. That's for
Password.
sure. Yeah. So good stuff. Very excited to have him. And before we get into talking about the mortgage process today versus what it was and where it's ripe for improvement and the hype versus reality with technological advancements where we are, I do want to thank our sponsor, which is very on brand for us, and that's Tidalwave AI. Tidalwave is the only agentic AI mortgage point of sale. And maybe Mike will argue with that actually. Mike, let me at least finish my thank you to the sponsor here. You can check them out at tidalwave.ai. Agentic AIs at their core. They're multilingual. They can convert voice. They run dual AUS. There's a lot of benefits. Go check them out. Tidalwave.ai. Uh, but Mike, before I let you potentially plug Vesta here or anything, let's talk broader picture and kind of set the stage for people. When I was growing up, and I'm sure Kristen felt the same way in the coming, having a parent in the mortgage industry, you always heard it equated to getting a tooth pulled. Like, oh, would you rather have a root canal or go get a mortgage? And obviously, we've made great strides since then, but it's still not an end-to-end digital seamless process. Sure, maybe companies claim that, but I don't think the industry's quite there. Certainly, as a whole, it's not there. Where are we today with the mortgage process? Because companies now are bombarded with all these tech solutions, and I think it's hard for them to vet. But what's actually uh, reality, not necessarily possibility, but like reality right now for the industry? How would you look at the process?
Yeah, I mean, I think the industry has definitely made a lot of progress. I think to your tidal wave point in general, like people can apply online. I think, a decade ago, like it was pretty hard to even apply online. So you've definitely seen some progress. You've seen, time to close improve marginally, probably not much. But at the same time, it's funny because I was thinking about this, and I don't know how many, listeners or how many people in the industry spend a lot of time recruiting like senior people who are not in the industry. But of course, I recruit a lot of like senior software engineers and like those kinds of people. And it is, and right now, for example, I'm like recruiting for some executive roles. And it is just frankly amazing how many of those people are like, oh yeah, I got a mortgage and I saw like what you guys are doing. And I was like, wow, this experience is still like, I don't understand what's going on back there. Like, why am I calling my loan officer every day for 3 days and he has no update for me whatsoever? Or, how come they asked me for this doc like 30 days in that they probably should have asked me for like 5 days in? And so I definitely think there's still a lot of confusion. It's still very, very complicated. And unfortunately, we have not been able to like abstract the sausage making away from the customer. And so, while we've definitely made like the first day of the process much, much better, where like you can go online and type it in or voice narrate it or whatever people want to do these days. It's just, I think the problem is because it's so complicated, you have to build a really nice abstraction so that people don't feel how complicated it is. And I don't think that any consumer I really know has felt that way, except when you are recruiting these like senior software engineers, occasionally you get one who's like super rich. And then they're like, they went to like First Republic and they're like, I never had any problems with my mortgages. And it's like, no, because your like CPA just sent your entire, all your docs to the relationship manager and they figured it out for you. So definitely at like the very high net worth end, I think you just see like people, like highly paid people patching the process. But I think the big problem is like we all know it's super complicated. And consumers unfortunately can also tell it's super complicated and they like really shouldn't have to.
Kristin, I feel like I talk so much. I'd like to let you ask something.
No, it's good. So I'm curious, Mike, like, whenever I went through the process of buying a home, Robbie and I've talked about this a lot. It's just like kind of it's at a distance when I'm doing research on other consumer experiences, but when it's yourself or a close friend going through it, you're like, what is happening? Like it just kind of blows your mind a little bit. And I am curious, we're at a point where I feel like the industry has started to really maybe leapfrog a little bit where they're like, okay, we're adopting AI, making things more efficient, but where do you feel like things are really broken right now? Like, do you in within the process, like what do you think should be prioritized?
I would say that like a huge percentage of the complexity in mortgage, I honestly think is third-party coordination. It's like you have to call the insurance company. If you want to do a refi, you've got to get the old lender for like a payoff, which we all know is often not very easy. You've got to coordinate with like the title company, and the title company goes to the county, and you've got to get an appraisal. And so actually, I think that like a lot of the complexity ends up being these like other third parties that you have to coordinate with, and those coordinations they're like email, they're like phone calls. There's a whole bunch of like that kind of stuff. I do think, of course, that there's always cost in there that people want to take out. There's always confusion in there that people want to take out. There's mistakes that get made by the processor that get caught by the closer. Like all of that stuff absolutely can be fixed, and I think will get fixed, and is stuff that lenders are investing in. But I think part of the problem is until you really figure out how to make that third party coordination much, much faster, it is hard to make the consumer experience better. Which, by the way, is very different from like how do you take cost out for the lender, where I think actually most of the cost for the lender is probably a lot of the like internal checking and double checking that I mentioned. I think actually a lot of the consumer experience problems are this third party coordination thing. And I think being very rigorous about like those two problems are related, but they are actually separate. And you like if you want to prioritize one or the other, you might optimize for different things, is probably really important. But yeah, I mean, like it's all the long polls are pretty much always these third parties. The confusion is often these third parties. And I think like one of the reasons it's really hard to explain stuff to the consumer is because you've got to like figure out how to coordinate all where like if the consumer calls me and I'm in the middle of just like doing a purchase transaction, ideally I've got to be able to tell them like where the title company is on like, the title search and how close we are to title clear to close. I've got to be able to tell them where the appraisal is. I've got to be able to tell them, what I'm waiting on from the insurance company. And there's like, five or six other parties that I'm managing. And I think that that actually creates a lot of the confusion in the consumer experience.
And that does seem like something very fixable in terms of communication to the consumer. Like to be the to have to say, here's where all these things are, it feels like that could be something that the consumer is able to just see, here's where the things are. And then the loan officer is really just about, providing advice around their loan options or that kind of higher level thing. Like, what are your thoughts on that?
You would hope so. But I will say that, and like there are a whole bunch of companies, for example, in the appraisal space that are working on integrating this experience and making that better. And is that integrated all the way through to the front end? Probably not in most scenarios or for most lenders. But like for title, it's actually really, really hard. And that's because if you do purchase, there are like 3,200 or something counties. There's like God knows how many title agents all around the country that like have their own mom and pop setup. And you talk to most of these lenders, and it's like, how do you manage your title experience? And the answer is like, we have the processor send an email to the title company that the real estate agent chose, and we go back and forth over email. And so it's super non-standard. None of that stuff is driven like by real-time communication. It's always like the title company is going to email you when they've got something, or you've got to email them for an update and wait 4 hours to get it back. And so I think actually often it's even hard for a lender internally to say, like, I understand exactly where this loan is at this point in time. Like, when we talk to our customers, they say like, hey, we have a pain point, which is just if we knew exactly where every loan was, we would feel a lot better. And oftentimes you don't because you've got that third party, whether it's like, hey, I've sent out the email for the insurance company to go and like get me the updated mortgagee clause, but I don't know when they're going to come back to me. They haven't given me an ETA. When they give it back to me, like 20% of the time I need to ask for another edit on the mortgagee clause, or I've got to move the date or something. And so there's just all of the communication is so analog and not standardized, and there are so many different counterparties, so many title agents, so many insurance companies, all that stuff, that I think that it sounds like it should be simple, but when you actually go and try to implement it, a lot of it is a standardization problem.
Mike, do you think that advancements in the process are being driven by borrower expectations, or borrowers still think getting a mortgage is a pain in the butt, and we're seeing advancements being driven by this, like almost a PR of the tech industry saying, oh, well, this exists, so you need to do it. Like what's actually pushing people forward in the industry?
I think from my conversations with lenders, especially with IMBs, who are now the plurality of most of the market, it's cost. And it's really like cost and profit margin. And those are important things. And like people have got to be able to run sustainable businesses. But I actually see that being much more of what drives, process improvement, tech adoption, et cetera, than customer experience. Everyone wants to say customer experience is super important, but let's also be like very level-headed and realistic about it. Most consumers, they do it every like 7 years. They expect it's going to be painful. And it's such a big transaction that I don't know if we've even seen like the revealed preference of how much consumers care about experience. Like, I don't know if anyone has done the study. I'd be curious if you guys know of anyone who has, which is like, hey, if you make the experience X better, take Y days, take like, fewer touch points with the consumer, better status transparency, whatever. What is it actually worth in like a borrower's willingness to take like an eighth worse on rate? And my guess is it's actually like probably not worth that much. I don't know. But I think that, and I talk about this a lot, which is I think we have a lot of like theoretical, like this is how the world should be, but actually getting to that place requires like someone making a real investment and like, IMBs or lenders deciding they want to make real change and like tech people actually investing a bunch of like time and money and resources that can be done, go to like all sorts of other things into this. And I think when you add up all of that investment that you have to make, the question is really like, does the consumer value that enough? For a transaction they only do once every 7 years, it's not really that much a repeat transaction. And this is the place where actually the banks have often invested more. And frankly, it makes sense because the banks, they're going to see that consumer again the next day when they withdraw from their checking account, or they're going to see that consumer again, 2 months later when they need a personal loan. And so banks have always placed like a slightly higher premium on the consumer experience, not because they're like better people, but because it's just rational for them. Like they have a more interactive touch point as a brand with that consumer. For like someone who only does mortgages, I mean, if you're not going to see the consumer again for 2 or 3 or 7 years, it kind of makes sense that like consumer experience is not driving what everyone's doing.
But I would expect that that would drive referrals. I mean, I think especially with younger consumers where I don't know. I at least, if I have a really good experience, I'm going to tell all of my friends about that, and if I have a mediocre experience, I'm just not going to, which is exactly what happened in my process. But there was a Stratmore study done, I think it was last year, and I don't know the comprehensive, like, I don't know the whole study, but I had just read this line about providing a simple, efficient process combined with trusted guidance generates 4 times more value for repeat and referral business than borrower affection for the loan officer alone. So I just kind of, that's only tangentially related, but I think the idea that we're like looking at customer experience, I do think is really valuable as we look at the comprehensive nature of it. But I also think the behind the scenes part like feeds into that, and I don't know, like consumers definitely don't know what they're missing. As you said, they're not repeatedly going through this process. So Robbie, what are your thoughts on that?
I think we're seeing a shift this year specifically. You look at Rocket acquiring Mr. Cooper, you look at some of the steps UWM has taken with its own servicing, but recapture even for just an independent mortgage bank is changing. The game is changing. And maybe it's Rocket has actually pioneered this in terms of, well, Rocket Money gets them a whole subset of customers.
Yep.
Then the servicing book gets them another whole subset, and they have all this data out there. And so even if they're not selling multiple financial products over the course of a customer's life cycle, they're still finding ways to retain that borrower, to engender brand loyalty and those sorts of things. And I think that's what we're shifting toward. And so there was a good comment in the chat I think we'll address Debbie's in a minute, but Mike said the problem is that people are getting the price before they get the experience. And so, Kristen, that would be an interesting survey, like Mike suggested. You know, if you were to get such a great experience, what would that be worth to you in rate or in
Mhm.
price? You know, product, price, service, pick two, sort of thing.
Yeah,
Go
and
ahead.
it's funny because
Okay.
that is something that I've talked a lot about is that millennials will pay more for a better experience. But when it comes to their, and that's defined in other areas, not this industry. We don't have the data on this industry, but I am curious if that's true when it comes to getting a mortgage. Like I don't know. Would I put up with more? Would that efficiency and safety and that kind of experience allow me to decide I'll pay a little bit more and how much, you know?
Yeah, and I will say on this, like my peer group is certainly biased, by the way, right? Like I live in San Francisco, my friends are all San Francisco or New York. Like I think coastal, it's pretty well established that like they're more price sensitive, they're more financially savvy, all that stuff. I am the only person in my like group of friends who went to college together who is like even remotely close to the mortgage industry. First of all, you'd be surprised at how many of them get a mortgage without asking me anything, which I think is like kind of crazy. But then when I do get asked, 100% of the questions are where am I going to get the best price? None of them have ever asked me like, oh, whose experience is better? They're like, oh, it actually doesn't really matter. Like I'm making, like a $500,000, $600,000 situation or whatever. It's just like I'm optimizing on price. Please give me price and rate. And so, and I definitely think people don't get the experience, but back to your referral point, Kristen, I also don't know that like referrals are as big a component of the mortgage industry, given all of the other stakeholders in the purchase transaction, real estate agent, et cetera. Um, like I think friend referrals are maybe not as big of a factor as they might be in certain other product lines because there's not as many people entangled. And then B, I don't know what percentage of people are asking their friends like, hey, what did you like your person versus like, hey, was the price good? Because I do think that, this is just a space where the dollar amounts, the nominal dollar amounts are so big that price really does matter to most consumers. But at the end
However,
of the day, it's the biggest transaction.
on a $500,000 loan, the different, an eighth of rate difference is like $35 a month. So if people knew, everyone's the rate, the rate, the rate, but if they knew it was only $30 a month and you could get way better service, Mike, do you think that that would shift how they viewed it? If we can shift from rate to payment and hey, we'll give you great service, but your payments can be $30 more a month, $300 a year, sail through the process.
Totally. But I think that really ends up being like how much better of an experience, right? Like you also have to ask yourself like how differentiated are all these lenders from each other on experience? Really, like there are a few that have invested in much proprietary stuff that do a really great job, but I think that's a hard open question. And then there's always the uncertainty of like, all right, my friend said they had a great experience. You have to go with the exact same LO. Is the rate difference really only an eighth? Is there a points difference? There's all sorts of stuff there. But the other thing is it is like a $500,000 loan. Let's just call it like instead of an eighth in rate, let's call it half a point upfront, right? Like roughly the same thing. If it's the biggest financial transaction of someone's life, like which we often say, we're like, oh, so it should be a good experience. It also means they're probably like they should be more price sensitive than they are in like almost everything else.
Yeah, totally. There's a really great ad from John quoting the JD Powers survey that consumers pick a mortgage company for one, rate, and two, financial education. I think that financial education piece is providing that safety. Someone going, like you said, going through the most stressful, biggest financial purchase of their lives, if someone's guiding them through that process, they're going to feel a lot better about it if they're looking at multiple lenders. So yeah, but to your point, rate was number one.
No, and that's a
I
great
don't,
point. And I should say there, like I actually think in the last 10 years we've made a lot of progress in financial education. Like there's a lot of lenders investing in how do we go earlier. We talk about like Rocket Redfin, for example. It's like how do you find the consumer earlier? How do you help them on that journey? How do you be their trusted advisor? Like I actually think the industry has made a lot of investments there. But once they're in the door and they've given you ITP and they've locked their rate, like how many investments are we making in that experience? I don't think nearly as many.
I know, man, because I was going to say whether it's a borrower that's started the process with a company or a originator that's invested in tech, it's so hard to change horses in the middle of the stream. Like
Yeah.
the process could be horrible for a borrower. That's probably not going to make them change if they're far enough into the process to a different lender. Like, you're stuck. And I think you've seen this in the on the vendor side of things, service provider side of things. A company gets locked into a contract, they don't like their provider, we'll just deal with them. And I'm wondering, they're kind of interrelated where it's kind of this mentality in the industry of, once you're in it, there's a stickiness factor. And so we don't have to provide things to keep you happy. I just wonder what it would take, a catalyst for change of that. Mike, you've thoughts there?
Yeah, I mean, I think that frankly, I think one of the reasons everyone's like the industry's at a turning point and it's like so exciting is like, you know, we made it through 23 minutes without talking about AI, so that's always impressive. But like, I just think that the reality is that in order for a lot of these things to change, in order for it to, to improve this part of the experience where I'm saying, from the moment the borrower is really locked in with you to close, it's not an area that it necessarily is obvious even that like it makes a ton of business sense to invest in. And so in order to do that, there are a couple of ways that you can drive up investment, right? You can say it makes way more business sense than it used to. Consumers talk more, internet, reviews, whatever. Maybe people think that's a catalyst. I don't know if that's a catalyst right now. The other thing you can do is you can dramatically reduce the cost of the investment. And I think that like similar for like vendors who are in there already, it's like, does it make business sense to offer better customer service? Frankly, for some of these like old entrenched vendors, they just view R&D as like a cost center, right? And so it's like they might not think it necessarily makes sense to make that investment. But if you can reduce the cost of the investment, then it may make sense again. And actually what I think you see when you talk about AI is it just like it genuinely just reduces the cost of a lot of investments in this world. Like it means maybe that you can make that experience from, ITP to closing for the borrower much, much better without making as big of a reinvestment as you used to. You can actually like they're easier to deploy tools. It's like less change management. I think that people often, are looking at the world in that lens, or it's even just like easier to build software, like probably 30% more efficient to build software than it was 5 years ago. And so I think that when you reduce the cost of the investment, you also get like all sorts of good benefits for the world. And I think that really every industry, not just mortgage, is benefiting from this idea that like if things are easier, we'll get the chance to do lots of things that previously we just like couldn't really justify an ROI on, which again, I don't know if anyone has tried to make like a business case for, hey, I work at a lender. We're really going to improve the way that we communicate with the consumer and the experience from ITP through to closing. And here is the like genuine hard dollar ROI case for spending $1 million, $2 million, $3 million doing that. I don't know if anyone's ever seen that. I've talked to a lot of lenders and I've never actually seen something like that. And I think the question is like, if you can do it for $100,000, maybe you would do it even if you don't know the ROI case is less obvious.
Do you think so?
Go ahead.
Go ahead. Go ahead, Robbie.
I was gonna say, like, how different today is the process than it was 5 years ago? There's all this talk about tech, tech, tech. Has anything actually changed? Have we actually made concrete advancements?
What is it that
Sorry to
people
be
say?
cynical like that. I know it's such a cynical
Yeah, yeah.
question.
No, it's a very cynical question, but we've spent some. I also feel like I've been sitting here. I'm like, wow, I feel like I'm spending too much time with Jeremy Potter. I'm like getting
We all
too
do,
cynical.
all of us.
But I think that people say like the future is here. It's just unevenly distributed. I certainly think that there are lenders who have made a lot of investments in process and change management, in reworking their workflow, in subtracting inefficiency. A lot of that, again, in my mind, it's like normally when you talk to those people, like the reality is that's cost driven. That's not always like process driven. But I think you've seen improvements there. But I certainly will say that like probably for most lenders, I don't necessarily know that in the last 5 years, a huge investment has been, hey, we're going to make the consumer experience significantly better. We're going to reimagine it. We're going to go redesign it. I mean, frankly, for the last 3 years, most lenders have been like, we're going to figure out how to stay in business and, get to profitability. And all of those things are completely understandable, right? Like those people have to do that if they want to serve consumers at all, if they want to put people in homes at all. But I have not seen, I would say, widespread change. There are certainly pockets where I think there are a few lenders who are really saying like, we're going to figure out how to automate much more of this, how to drive certainty up front. There are some lenders, some that we work with, some that, we don't work with, that have been really good at, for example, adopting day one certainty and verified programs and giving like more definition. And as a result, they like miss fewer closing dates and purchases. And I think there's definitely people that are investing, especially in the verified data ecosystem. But I mean, like I can probably count on one hand the ones that are doing really well that I've talked to in depth about it. And so, for the most part, I would say not necessarily Robbie, but you're seeing green shoots where they're just some players who are doing that really well. And then the open question is going to be, all right, does that create a competitive advantage that means everyone has to do it? Does that create a competitive advantage that means they grow and other people shrink and that's how this takes over the market? Or is it actually just like the market is too inefficient because consumers don't talk enough and they don't do it often enough and they'll have better consumer experiences and maybe that means that they can, be an eighth back on rate, but it doesn't force its way through the rest of the industry. And I think we'll see how that plays out.
Yeah, I'm just wondering if for those who don't improve the experience earlier in the funnel, like so they're capturing the consumer earlier and providing a good experience at that moment, that they're not going to be able to stay in business. I mean, it seems like, and I'm curious your thoughts around like with so much of the mergers happening and how can lenders stay competitive if they're not focused totally on customer experience in the process? Like me, my thought is they need to focus on customer experience in the early acquisition or earlier in the funnel kind of thing. But what are your thoughts?
Yeah, I think that's exactly right. I think mortgage is basically like there are two components, right? There's like a sales game and then there's like a cost game. And there's to some extent a capital markets game of like, all right, you've got to optimize the revenue. I would say that like most people do that capital markets piece, I think, pretty well. At least like the people who are still around who are, like um of enough scale where they're delivering correspondent or whatnot. And so it really is the sales game, which is like, how do I get more consumers in the door? If I do more loans, I will normally be more profitable. And that's like all lenders have fixed costs, is kind of just how it works. And then there's the operations game of like, how can I reduce my costs to originate? And that's good. That goes back to what I said about like, let's be honest about the separation of the two problems of like, the operations game is not a consumer experience game. The sales game is very much a consumer experience game. And that's like, how do I make sure that experience before they get to, being locked in with me is super frictionless, is really delightful. I'm delivering value along the way. Like they want to continue to have that relationship. And I think that that's a place where lenders have been investing a lot. I think it's the actual like making of the mortgage where we still have not necessarily invested as much in the consumer experience as I won't even say as we should, because like again going back to the business case, I'm not necessarily sure that we should, but as definitely like many of the people that talk in this industry would like. And frankly, if you're a lender right now and you're trying to figure out how to make sure that you're around next year and the year after and the year after that, and you're like turning a good profit and you're growing your business, to your point exactly, you should be focused on experience in the sales layer and probably cost in the operations layer. Experience in the operations layer just doesn't feel like something that you've probably, if you've gotten the other two really right, then it's like you might want to play in that sandbox.
Mm-hmm. Yeah, that's interesting. It's something I'm so passionate about, but I do think if you're getting the experience well in the earlier in the process, it's probably going to feed into that as well. Robbie, you were gonna say something.
Yeah, I don't know why companies that have spent money and man hours and those sorts of things improving their tech stack and experience aren't advertising that more. I don't hear any company going to borrowers saying, "We have this most seamless, process in the best process in the industry, the happiest." Like I don't see it. It's just push button get mortgage is like the most notable one. I'm wondering, is it, that consumers don't care how their lenders pick the platforms that power their experience? Like I know I don't want to belabor the point too much, but I think it's important. It's weird that it's like somebody doesn't care at some point along the line, and so it's like it's not important.
Well, I would be curious, John made that comment about the JD Power survey. Like, how many consumers say, like, oh, the process and the technology is like really what,
But
is what I've been talking about.
that's the referral side that Kristin was saying, which I think is going to drive so much business going forward. I think that is a focus, should be a focus.
I don't know. I think that this is a place where we philosophically think it should be simpler and we think people should care, and like, do
They
consumers
don't.
actually care? I mean, like maybe they do, but I will say that like their behavior and revealed preferences probably mean that like it doesn't appear to me that they do. Like I don't, I guess what I would claim is I don't necessarily believe there's like some huge business opportunity for someone to improve that process. Like if I were going out to a venture fund and I was like, hey, I want to start a new mortgage lender and you should give me, you know, $50 million. And what I'm going to do is I'm going to build this mortgage lender and it's going to have an amazing process. And that process is going to mean that I can just eat market share because the consumers are so excited about how good that process is. I don't know if like that thesis would necessarily hold a ton of water.
Look at that comment in the chat though from Mike. Quicken and Rocket built their whole business by claiming the experience was the best. That's like a large reason that they're here. And other companies didn't follow that same playbook. Even if it actually in reality wasn't push button get mortgage, that allowed them to get big. It's so weird that like it hasn't been a monkey see monkey do when it comes to claiming, hey, it's so easy with us. It's so easy. It's so easy.
I mean, I without going into specific lenders, I would be curious what like the mortgage people on the call think of you know, specifically the ITP to closing, like the actual making of the mortgage part of the process, how much better or not better that is for consumers. You know, you hear like all sorts of stories about all these different lenders at that shop versus others.
Well, and that gets into some of the questions around, we haven't talked a ton about AI, but tangentially we have, and around how that a lot of people say that that shouldn't replace the professional, like that is, supporting, increasing efficiency, that kind of thing. And there's a lot of survey data, but it's skewed that direction. But then also, I'm curious your thoughts as a cusper of millennial Gen Z, where we're seeing, like, will Gen Z expect a fully self-serve experience? Like, what are your thoughts on where AI plays a role with the sales professional and that
So
experience?
I think so. People have been talking a lot about Gen Z and social media recently in tech. I don't know why. This has like come up in like 4 or 5 conversations I've had in the last couple of weeks, just like in San Francisco. But there's this big thing, I think, which is very interesting, which is like Gen Z is actually getting more out of a lot of the like Instagram. I mean, like they never used Facebook. Like they're always like, my parents are on Facebook. I'm not gonna be on Facebook. But a lot of the like big box, like everyone consolidates in the same place, social media. And what you hear is they've been pushing a lot towards like these more like intimate niches and these like small communities. And what I actually am starting to suspect from talking to, and you know, we have a bunch of, I mean, like I said, I'm like 1 year inside the cutoff. So reasonable set of Gen Z people in my life. Um, People often talk about Gen Z may actually want human connection more than millennials. Some people think that's cyclical. Some people think there's a COVID factor, which I actually think there's probably a pretty big COVID factor. Like I have friends who like graduated college during COVID, and if you graduated college during COVID, it was like a very different, you know, like end of college, beginning of the workforce experience for you than other people. And so I actually suspect that Gen Zs may want human relationships in that process more than millennials. I think that AI can do a ton. I think that AI will probably take a lot of knowledge work. I think that, you know, maybe controversially, actually the like origination, like the operational part of a loan, like I don't see much reason why over time, like with the rate AI is improving, it can't do that in 5 to 10 years. I think the thing about sales specifically is that what I always say is AI will be able to take away the sales job from humans after it has taken away the buying job from humans. Which is like maybe in 10 years, if you just tell your AI assistant, hey, refinance my house, like go figure it out, then an AI seller will be able to convince your AI buyer to do it. But if you as the human are buying, I suspect that like the human connection of sales will be one of the last things actually to go to AI. And that's not an opinion that I hold that strongly, but I do think that, you know, the idea that Gen Z is like more than anyone going to be like, oh, I'm fine, totally self-serving. I think that that may actually hold less water than like for even like my cohort of millennials, where it's like it feels like no one that I know wants to get on the phone ever.
Yeah. Yeah. It's interesting. In the 2025 Next Gen Homebuyer Report, we surveyed 1,000 millennial and Gen Zs, and Gen Z were more likely to say that they went to social media. 40% say they go to social media to learn about homebuyer education, and 43% said they went to Chat GPT to learn. And I'm sure that's increased just in the last few months. But I think that starts there, but then they want to talk to somebody, and I think, yeah, to your point, even more so than millennials. At least that's what I'm seeing in the data. And I'm curious how that continues to unfold over time. So
And by the way, I'll say like I find it so funny when people in these surveys are like, "Oh, people go to ChatGPT to ask this thing like it's a substitute for a person." It would have been like if 10 years ago you put in like the survey like how many of you like Google when you start looking at this. Like I
yeah,
really think that especially for Gen Z and like people who are more AI native, like ChatGPT is just the Google replacement. And it's like, yeah, people always Googled like homes. People always looked at homes in Zillow. Like they still had real estate agents and loan officers. And so I don't think that like suddenly ChatGPT is a substitute for loan officers, just like Google wasn't. And so I think that
totally.
that ChatGPT number is going to keep going up, and it's just going to be like someday we'll think it's silly that we even asked the question because just like you know you ask everything to ChatGPT and so what?
Yep.
Kristen,
Yeah. So
can I
good.
petition for the next series of surveys you do to include the experience and relationship, like as a focus of
Yeah.
how much it's influencing people's decisions? Because uh, I think that customers feel I'm speculating here, but if I can go on Chat GPT and ask it anything and get a very good answer, a much better answer than Google, I don't necessarily need to rely on a professional as much as I might have in the past when I felt like I was in the dark or there was this kind of, layer that was separating me from actually knowing what's right for me. ChatGPT is amazing for stuff like that. And so I think we will see it shift toward more experience and those sorts of things. Yeah, Kristin.
I think it's not good enough yet, though. I mean, it just, yeah, to me, it would be like the starting point, and then I still really need an expert. But I'm curious, yeah, where because that's going to change really quickly. But absolutely wanted to add that to the next survey. I'm actually about to do one, so we'll be thinking about that.
Yeah, that's good. And we should remember too, Mike, these things are evolving so rapidly that ChatGPT of a month ago gives much worse answers in one sense than ChatGPT of today or 3 months from now. Like it's
Yeah.
learning so quickly.
Yeah, people often say like, oh, ChatGPT is not that good. And then I genuinely want to ask them like, which model are you using and what's the last thing you did and all these things? Because my point of view actually, which is kind of a hot take, I certainly think that ChatGPT right now, it's a little bit slower, but it is smarter than I am. Like,
Oh, for sure. Right? I mean,
no, like not even like has more knowledge, like is better at reasoning than I am. Like if you give me like a math problem and give it a math problem, like it can do math.
What's IM for our boomer audience and me included? What's IM?
No, then like me, Mike, like
Then
ChatGPT
I
started.
you're like,
Sorry.
what is this next
For,
thing
you
we
mean,
don't
for
know?
our
never took
Boomer
grammar in
Mortgages
school.
Millennials host, Robbie, what is that? Yeah, so
Yeah. Well, I'm in an industry where everything is acronyms. I thought it was another acronym for
Yeah.
something.
I mean,
Yeah.
that's not, I guess I assumed that pretty quickly with things like that. But I do feel like like for example, with this white paper I just did, I put into, and it was I was using Gemini, but I had it read a bunch of videos and then give me summaries and whatever. And then it was like it completely hallucinated everything. And I was writing for 6 hours based off of hallucinated information. And so, that's obviously just like a bug slash error, but I also feel hesitant around just like trusting anything, especially for, again, biggest financial decision of my life. I'm going to get the info and then I'm going to still like validate that, you know?
Hey, Mike, I
yeah,
feel like you've been. Go ahead, and then I'll ask my question.
I was gonna say I use ChatGPT all the time every time I have like a medical question now. But if it
Oh,
told
me
me you
too.
have cancer, I probably would check with the doctor first. You know, it's like
Totally. Yeah. It is my primary care now.
Well, yeah, it's better than WebMD was, where you had cancer every time you Googled like minor cough on WebMD sort of thing. So good that we advanced. Mike, I wanted to say you've been such a good guest. I want to talk Vesta for the last 5 minutes of the show. You know, why did you start it? What was the like kind of your background and where you saw the need and how you think Vesta fills that?
yeah. Like I said, I actually hate shilling Vesta, so that's probably why. Like I much prefer to like think about the problems in the industry and just like, I love it. I think it's really interesting. But when it comes to Vesta, for us, at the end of the day, I think that what I and Devin, my co-founder, thought we were uniquely, able to do in this industry where we have unique skills is we're really, really good at building technology. And we got into the industry because we were both early at Blend. Devin was the first engineer, and I was probably like employee number 50-ish. On the product side, when I joined, we still did like 1 or 2 loans a day. And so really got to see that company grow, got to spend a lot of time with lenders, and kind of just fell in love with, what how complicated the industry is, which I think is just like a good, ripe environment to like build new stuff. Spent a lot of time with these lenders, and at the end of the day, like really it was the lenders driving. They were just like, hey, we want to modernize X, Y, and Z. And whatever it was, you heard all sorts of things. We want to modernize our customer experience. We want to reimagine the way that like consumers interact with us. We want to, I mean, like in 2017, it was like integrate SMS. We want to be better at marketing and recapture. We want to, give borrowers more certainty up front. We want to reduce operational cost. All of these things, there's always a family of things, that the industry wants to work on. But so many of them came back to like, hey, can you help us do that? And the answer was almost always like, no, because you're too constrained by your existing LOS. You're constrained by something that's legacy, by something that's pretty inflexible, by something that, frankly, to your point about vendor stickiness, it's like where the company isn't always excited about being a partner and investing because to them it's cost. And again, it's like the business case. It's like if you can't make a business case for the vendor, I understand why they don't do it. And so it just felt in a way that the industry had spent 5, 10 years building solutions around the LOS. You hear all these things like, I want to get my users out of the LOS. But like so much of it is not like a structural architectural take or like a technology, like, architecture take. We have a problem where there's just this thing in the middle that is like impeding our flexibility and our ability to innovate and our ability to do what we want to and our ability to drive cost out. And if we could replace that with something new, that would be really exciting. And after like a couple big lenders literally called me and told me like, hey, you should probably just go build an LOS. It's like, all right, great. So I left Blend with Devin. We started Vesta, and the whole thesis was, hey, people want competition in the LOS space, of course. They want something that's new, modern, and flexible. And then the big one was cost. You know, you start in 20, you really come to market in 22. Everyone is thinking about operational cost. And I think that what we've seen, you know, where I said like the future is unevenly distributed, there are definitely lenders who have started adopting like task-based workflow, where really the people are only doing what the system tells them, and that allows you to do change management and process optimization much more easily, allows you to automate much more and have people stop doing the work that you've automated. And I think you can see real cost reduction there. So that's been our focus. But very much a big part of it has also been, how do you make sure that the system is like modular and flexible and API driven in a way that there's going to be lots of other great tech innovators hopefully coming into the space, and they can plug in really seamlessly and deliver all sorts of new things for you know, lenders and eventually for consumers, including, you know, going back to my comment about the high level investment it would take to improve that experience today. If you can really reduce the barriers to entry in this industry by saying you've got a core system that's way easier to integrate with, my hope is that, you know, you'd have a lot more interesting solutions coming to market and a lot better outcomes for everybody.
That might be a good place to leave it for
Yeah.
today. Yeah.
Yeah, it's exciting.
Mike, this is
Exciting
phenomenal,
time
man.
yeah.
No, please.
Oh, I was just going to say it's such an exciting time in the industry, and you guys are doing really innovative work. So just really appreciate your insights and what you guys are doing to bring the industry forward. So, Robbie.
Although,
back.
Mike, you were wrong, because the first thing I did in the show was talk about AI, and that's tidalwave.ai. Go visit it, go check it out. So we didn't go 20 minutes without talking about it. It was the top of the show. But I really enjoyed the discussion. Always a pleasure talking to you. And what's cool to me about this, looking at the three of us here, it's been such an aging industry, and I'm like, when are the young people really going to start making way? I feel like we're there, like, I'm looking at this and I'm like, I would love to go have dinner with y'all too at any conference I go to and get like a cohort of us young people. I feel like we're like finally starting to really enact meaningful change, and it's neat to see it's taken long enough, for sure.
Yeah, I
Speechless.
mean,
Right.
I like to joke. I'm really excited to not be the youngest attendee at MBA chairmans. So if someone wants to come next year, that would be great.
There you go. Good stuff, everybody.
All right,
We will
thanks,
see
everybody.
you. We'll see you in July. I believe that the date is the what would be the 29th of July. We'll see you then. Looking forward to it. And thank you, Mike. Thank you, Kristin. Thank you, Tidalwave. Bye, everybody.
Thanks.
Thanks,
Bye.